The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady. And you got 16 days to get your act together because tax season's winding up April the 15th this year. And we're going to teach you lots of stuff, hopefully, so that you don't overpay your taxes. And if you have done it incorrectly, remember, you can go back and amend the last 3 years' returns and get your money back. And so I'm joined in studio with Christopher Fabian. Hello, Chris.
Hello, Esther.
Hello, Christopher. So we had a tragedy today. We had a bunny die. And in our corporate office, we have kind of this
It
like
wasn't the Easter
terrarium
bunny to
kind
the
of
little
thing,
kids.
and some wild bunnies were there, and one of them died. So all my clients in the waiting room were worried that the Easter bunny died. Anyway, but the other bunnies are still on guard for tonight, right? But anyway, I'm Esther Gulius, the tax lady from EG Tax. We want to help you. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And wanted to just wish everybody a wonderful, blessed Easter, because it's really not about the Easter bunny. It's about the Lord. So
Correct.
that
Yes.
means everything, right?
Yes.
Want to talk about the letters. I know many people have gotten these letters that the Internal Revenue Service has sent out demanding, it's not requesting, demanding that you prove your identity. And this is their way of launching out to make sure that the people that they're issuing refunds to are actually that person. And it is frustrating, and we understand. And as soon as tax season's over, if you're absolutely cannot do it, we will help you to get through. We can't say that we're you, but we can help you if you're especially having problems with the computer.
You either have to be here or on the phone with
right,
us.
because we can't do it, but because they want to make sure it's actually you. But we know how frustrating it is. It's something we have no control over. We don't know how they pick the people.
No.
And I even have two clients that absolutely have sent in the stuff and done the thing and sent in this form and sent in that form and they still don't get it. They just keep getting 90-day letters that they're going to get the money in 90 days. So we want to help you, but we certainly understand.
And the whole thing is, we know, because with what we do, the taxes, that the people who do fraud, they get $50,000, $100,000 refunds.
Yep.
So why don't they stop those returns and let these little ones go through?
That's true. That's true. I have a poor gentleman, $100. That's all he had, a $100 refund. They ultimately made him go down to the Internal Revenue Service in Buffalo. Anyway, I'm Esther Gulius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. We want to help you. That's what we're here for. We're open 9 to 5 on Saturdays, 9 to 9 Monday through Friday. 16 days less. We have all of our offices are closed tomorrow in observance of Easter. By the way, the important thing is to get your stuff together, right? Don't just pull it out haphazardly. I had a couple came in the other day, and they just dumped this big pile of envelopes on my desk. And so it took me a half hour to sort it. But then I said, "Are you sure that this is everything?" They said, "Well, we don't know." Well, if you don't know, we don't know. You got to make sure that you're putting everything down and compare it against last year to make sure that you're doing a complete and accurate return.
Yep.
Right?
Yep.
Okay, let's go to Mike. Hi, Mike in Lockport. How are you, Mike? How can we help you?
Good afternoon. Happy Easter.
Happy
real
Easter
simple
to you.
Question I think you can answer in 10 seconds or less. I won a Win 4 number or something on the New York State Lottery. I got $5,000 for it. Is there a way I can claim a not paying tax on that. I hear that I can do collection of my past stubs to offset the difference. Is that true?
Okay, so here's the thing. Gambling income, number one, is taxable on at the beginning as other income on your tax return. Then, if you itemize your losing tickets, your losing bets that you can prove up to your winnings are an itemized deduction on the Schedule A. But here's the rub. If you don't have large medical, if you don't have much in taxes, state withholding or property taxes, if you have no mortgage, if you have not given tons of money to charity, then if you have losers of $5,000, your standard deduction is more like $13,000. The standard deduction is more than your itemized deduction, which means you're going to get no benefit for those losers.
Okay, so basically then I can just say, here in New York, enjoy my money.
Well, it's New York. It's the federal
And the
government
feds.
too.
Oh,
But
that's
yes.
them too, yeah.
Yeah.
Okay, I kind of thought that was going to be it, but I was hoping there might have been a loophole.
Well, no, the loophole would be if you can itemize. If you can itemize, then you might have some benefit. But
I don't have much to itemize. I mean,
Yeah.
I have my house, and that's about it.
Okay. Do you have a mortgage?
Yes,
How much is your interest?
about 5%.
Of what?
How much do you think you paid?
How much
in
is your
interest?
interest that you paid
I
last year?
financed it at $60,000 15,
So
16 years ago.
So like $3,000. And how much is your property taxes?
Oh, I'm not able to answer that for you right now.
Okay, no problem. All right. Well, thanks for calling and happy Easter.
Happy Easter. Thank you.
All right, bye-bye. I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, now we got a text down here, right, Chris?
We do. It says, "Hello, Lester. I'm wondering if my mom, who has not done taxes in 3 years, she's elderly and disabled, if I did her taxes for her, can she still qualify for the COVID money?"
No,
Well,
not for the COVID money. I mean, maybe, oh, you mean
the
from
stimulus.
3 years ago?
Yes.
Yeah, well, that would be true.
Right. But
That's
check
still
her
open.
check her bank accounts, because if she's on Social Security, a lot of the people got it right in that same bank
Right,
account.
and I will tell you that's another letter that people are getting, that they thought they didn't get the COVID money, so they said that that they didn't get it, so the IRS on their tax return, the IRS was supposed to send it to them, but the IRS sends back the letter that says, "Oh no, you did get it," and so that's what Chris is bringing up a really great point. Make sure she really didn't get it, but yes, you can do it, and also if she pays property taxes, look into the New York 229.
Right. Yep.
Because she might have $350 coming back. So a
Yes.
lot of times you don't have to file. You're not mandated to file, but you want to file because you get money back.
Correct.
Right?
Yep.
Okay. Let's go back to Mike. Hi, second Mike. Hi, Mr. Mike.
Hello.
Hello, Mike.
Hi. I have a question.
No, Mike?
I was told
No,
that
Mike.
we can still
Busted.
put money into
Oh,
an
Mike.
IRA.
Uh-huh. Well, why don't we take a fast break?
All right. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break, and maybe we'll talk to Mike when we come back. And we'll see you in a minute.
We are family. I got all my sisters with me.
Hey, to us, you are family. I'm Esther Golias, the tax lady, wishing you a blessed and happy Easter. I'm the Esther Bunny. Well, I mean, that's good. Anyway, we're going to go back to Mike. We had a problem with some technical issues here in studio, so we're going to go back to Mike. Mike, forgive us. How can we help you?
All right. Thank you. I have a question about IRAs. Can we still put money in right up until the 15th of next month?
If you have wages or self-employment income and you don't have another pension plan available and you're not capped by the phase-outs, then yes, you have till April the 15th.
Okay. My real question is if we can put it in, can we take money out and then can we still take it out until the 15th?
Well, when you withdraw money from your IRA, it's taxable in the year with which you withdraw it. So if you withdraw money from your IRA Monday, then it's going to be taxable on your 2024 tax return.
Okay, not 2023, but if I
No.
could put it in through to the 15th, I could put it in through the 15th for 2023, but if I were to take it out now, it would be taxed in 2024.
That's it.
Okay, that was my question. I thank
All
you
right,
very
Mike,
much.
thank
I
you.
appreciate
Thank you for
your
waiting. I
being
appreciate
here
it.
for us.
All right. Thank you, sir.
Bye-bye.
Yeah, I mean, if your income's like you retired in 23 and your income's substantially dropping, putting money in for 23 and then taking it out in 24 when you're in a much reduced tax
That makes
bracket
sense.
isn't a bad idea.
Right, absolutely. I mean, it's like one of the things I feel about taxes and is like it's a lot like playing pool. You do this shot off this bank and that happens, and if you know how the whole thing works, it's remarkable. You know.
Yep.
All right, let's see what do we got
We
here,
got
Chris?
good afternoon. Regarding an IT 229, my federal AGI is 65,000. My total real estate taxes are 5,300 with star savings of 432. I've lived in the home for a full year. I don't believe I qualify for the real property credit. Am I correct? So
Well, you'd have to do the math, but if the 532 is before he got the check, so he's done a 4,900. I
would say no.
I would think not either. I
Yep.
have to do the math, but it'd be if it's at least 6% of your adjusted gross income over that, then you qualify. But then there's this other
the
computation.
14%.
Pardon me.
Then there's the 14%.
Then there's a 14%. Yeah, I don't believe you do, Don from West Seneca. But thanks for listening. Okay, what else we got? I have a question. What's that second
If
one?
one tax year you qualify for the 10% expenditure on medical based on income to write it off, do you still qualify if you used your HSA account to pay the medical expenses?
Well, because putting money into an HSA is one action, and paying them is another action. So they don't require, in order to do the HSA, they don't require the saying, "Oh, I'm going to spend my money this way."
Right, but if you use the HSA to pay for your medical, then no, you cannot use that money as an itemized deduction.
Right. Okay, I gotcha. I gotcha what you're saying. Okay. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Okay, going back to 16 days. I know like Easter's here, so which is very early, so it gives you 16 whole days, but 15 whole days before you got to pay the piper.
So
Get all
maybe-
your stuff together and file the return even if you owe money. Why?
Well, the penalty for not filing is a 5% penalty per month up to 25% of the balance due.
Right. And that's the big penalty. So if you owe money, file the return, then let's talk about how to pay the liability.
Right.
Okay? And that might be using your home equity credit, your HELOC, right? Which might be at 6 or 7%, but that's a lot better than 25%. You might want to set up a payment program. The IRS will work with you to make monthly payments on your balance due. So that's another option. You might want to borrow from family, borrow against your 401k at work, because you're paying yourself back.
Right.
But the most important thing is to go in and find out why you owed the money so it doesn't happen again next year.
Right. I just did that with the client today, and they were shocked with how much they owed. And I said, well, you got to change it right now.
Yeah.
Pulled up a W-4,
Right.
showed them the new calculations and how you're supposed to calculate it out, and figured it out. And so that we're going right in and we're going to raise holy hell.
Right. And a lot of people don't realize, I had a couple today who both retired last year, and they both had Social Security, and they didn't think about the 85% taxable portion of Social Security, and they both had New York State pensions. So, and so they owed money. And I was explaining to them that you can go into the Social Security website and make yourself an account, go into the Social Security website, and you can make the option, I would like 7% withheld, 10% withheld, and so that you have that money in there to cover that obligation. And remember, it's April.
Yeah.
January, February, and March are gone.
Right, right.
So you're already 3 months behind the 8 ball. So you want to make sure that you get that tax return done. If you owe money, make sure you can pay that obligation. Now, here's another one. I had a client yesterday. I said, you really got to change your withholding. And he said, I really like paying it this way. And I said, do you know you're paying a $328 penalty? He said, for what? And I said, because you can't owe them more than $1,000. 90% of last year's liability or $1,000, whichever is greater. But anyway, and he said, oh my gosh, I had no idea. So if you don't want to pay the penalty, they charge you a penalty if you owe more than $1,000. So make sure that you deal with that so that you don't owe them money.
Right. And that's when interest rates were at 0.5%, 0.25%, you'd pay them off right away. Now, with interest rates, again, at 5%, and depending what they're doing, it may be better to pay the $300 penalty if you're making more than $300.
Well, if you have that money in a CD.
Right,
yeah.
right. So you got to
Right,
look
and
at
you
the
do
numbers.
have to weigh the options. But
Yeah.
anyway, let's go back to the phones. We're going to talk 8030930, 8030930, star 930 on the cell phone. We got Pat. Hey, Pat.
Hi, Esther. I always thought with the RMD you had till December 31st to withdraw the money. So this year, last year rather, what I did was by December 27th, my fiduciary took the forms. I had 2 accounts, and he faxed it over to them. The one account sent me the check like within 2 days, and the other one didn't send it until January 5th. Now I find out I might have to pay a penalty because the check wasn't cut to January 5th of 24.
Okay, well, you are right, Pat, that you up till the end of the filing season, which calendar year, which would be December 31st. However, they would go back to you and say, why did you wait so long? And I have to tell you, I would talk to whoever it is, the fiduciary that should have been sending that money, and think about switching from the one fiduciary to the guy that got you the money right away. But
Well, the other one
there
pays
is an
higher
exception
interest
to
rate.
penalty.
The other one pays a higher interest rate. That's why we kept that one.
Well, okay.
And-
Well, you just might have lost it if you're penalized. But in most situations, if you do the exception to penalty, and you put down the explanation and that you got the money right away, they'll waive the penalty.
Okay, because I
And
have...
what form is it? 50?
You got to do the 5329.
Uh-huh.
Yeah, I'm going to go to your office. I have an appointment Tuesday.
Yeah, we'll take care of it for you.
Okay, thank you very much.
All right, thanks, Pat. Happy Easter.
You too, Easter. Bye-bye.
Thank you. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone.
And she said, "Thank you, Easter." But I bet you they were closed between Christmas and New Year's, and that's why it didn't get processed. So don't wait to the very last minute.
She's technically correct.
Right? She
right?
put it in, so she's
Right.
fine.
She's
They
technically
screwed up.
correct, and that's why they'll probably waive it. But
Yep.
You want to be proactive and not cause yourself consternation, right?
Right.
Okay. Wanted to also, I know we got calls coming in. People will sit at my desk and they're so proud because they did a capital improvement. And I just wanted to make sure that everybody understood that a capital improvement means that whatever was done for you is permanently affixed to your home and has increased the value of your home, and therefore you don't owe sales tax. It doesn't make it deductible.
Right. We get that a lot.
Right. Capital improvement just means that increase the value of your home. It's a permanent fixture to your house, and they're not charging you sales tax, and that's why they give you that capital improvement form. It doesn't make it deductible. The only thing that's deductible on your home is your mortgage interest, secondary mortgage interest if it's tied to the equity in your house, and property taxes. That's it. And Energy Star stuff.
Right. It's got to be an energy improvement. To the
Okay,
home.
let's go quickly to Denise. Hi, Denise.
Hello. I was calling to ask about college credits, the American Opportunity and Lifetime Learning. What is the cutoff for your income, a married couple filing jointly with a student in college for the second year?
Okay. American Opportunity Tax Credit, married joint, 160 to 180. And the Lifetime Learning, 160 to 180.
And that's their adjusted gross income it goes off of?
Yes.
Okay.
And but what you got to remember, Denise, is that that's the federal. New York State doesn't have an
That's a good
income
point, right.
threshold.
That's
So
right.
just because you may not get it on the federal, you'll still qualify for the education credit on New York.
But here's another little thing for tax planning. Let's say you and your spouse don't have qualified plans at work, and you want to put $15,000 away in an IRA. That would drop that threshold, so you would get more of the credits. So that's something you might be able to do as well.
Okay, great. All right, thank you. Have a good day.
Thanks, Denise. Thanks for calling. Happy Easter.
You
Okay,
too.
let's see. We only got 1 minute before we got to do the break. Wanted to talk to you about capital improvements, selling your, and here's the reason why capital improvements aren't deductible, because when you sell your home, the first $500,000 of gain, not of sale price, of gain, is tax-free if you're filing a joint return. If you're single, $250,000 is tax-free. So that means you can sell the house and go to Acapulco. It's not going to cost you anything if your gain is under those two thresholds. So that's why they don't let you deduct expenses for remodeling your home, because they're not going to tax you on it when you finally sell it.
Right. Yep.
Right? Okay, well, I'm Esther Galicia, the tax lady, 8030930, 8030930, star 930 on his cell phone. We're going to break for news, and we're going to be back with your calls on the other side.
We are family. I got all my sisters
Hey,
with
to
me.
us, you are family. I'm Esther Galicia, the tax lady, joined in studio with Chris Fabian. We want to help you. So give us a call, 8030930, 8030930, star 930 on his cell phone. And we're going to go to Mary, who's been so patient. Hi, Mary.
Hi. Yes. I have a question. My son owes some money because he didn't realize that because of the child care credit thing, that when his daughter turned 17, that he wouldn't get the whole credit that So
Right.
he owes this year for the 23 taxes. And is there any way that, should we have been told that because she's turning 17 that we should increase the amount of withholdings, or?
Well, there's nothing in the tax law
Yeah.
that makes it so that the employer has to let somebody know. That's something that we try to do when we're preparing tax returns. Is when I see somebody's 16, then I say to the taxpayer, "You realize next year your refund will be $1,500 less." Unless you have another baby. But yeah, so now live and learn. He now knows. And now the thing is, his child that is 17 now is going to go to school maybe in a year and a half, right? College?
Possibly, yeah.
So then he would qualify for the American Opportunity Tax Credit, which could get him an extra almost $3,000 in refund. So he's got a bad couple of years, but he'll be smiling with the AOTC.
Okay. Is there any way that they could make that up by contributing extra to the IRA, or?
Well, they could put money into an IRA. That would be, if they qualify, the IRA is absolutely a great opportunity to reduce your taxable income. They can give us a call. We'd be very happy to go over stuff with them.
Well, I think he sent Tiffany an email, but he hasn't heard anything yet that I know of. So I was wondering, so should he call and ask for her, or should he just call and
Yeah,
ask?
she's doing tax returns right now, but you can send the email to me.
April 15th, right?
And my email address, Mary, is egtax@hotmail.com.
Okay. At hotmail.com?
Right.
Okay. All right. So egtax
All right.
at hotmail.com.
Happy Easter. Don't eat too much tomorrow.
You too.
All right, thank you. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, so, all right, other things I wanted to talk about. How much can you give to somebody, Chris? Can you just give $18,000, that's all?
You can give up to $11 million.
Right. You can. Now, here's the thing. When you give to any person over $18,000, then you have to file a gift tax return. And you, the donor, might have to pay taxes for liquidating your estate. That's the whole premise of this thing. But if you give to somebody $100,000, let's say your kid, then your $18,000 of it will not reduce your unified exclusion. The balance then would be used to reduce your unified exclusion. And the only time it comes into play is after you pass away, and at this point in time, you have an estate over $11 million. So a lot of people don't know that they can give more without having to pay taxes. You got to just do a gift tax return.
And then though, if you're a married couple and you want to give you each can give $18,000 per child,
$36,000. And so you figure if you got your son and you're giving mom and dad $36,000, and then his wife $36,000. Now you're up to $72,000 and no gift tax return.
And maybe they have 2 children.
Right.
That's another $36,000.
Right. So there you go. And so you can liquidate. Now the thing that you have to be careful is not so much as a gift tax return, but remember there's like a 5-year look back. If you're thinking about, oh good, we're going to get rid of all this money because we're afraid we're going to go into a nursing home and we want to make sure we qualify for Medicaid, there's a 5-year look back. So if you're giving away large sums of money, that money still could be looked at that before you'd be able to qualify for Medicaid.
Right. And another thing, where are you getting the money from?
Oh, you're right. If you take it out of your IRA or your pension, not so good.
Right. Then you're going to pay tax.
Right. You're going to pay income tax.
Right.
But not gift taxes.
Right. So you got to be careful.
And so a lot of times I think this is the most asked question that I get. If I inherit my parents' home, do I have to pay taxes if I sell it? And probably not, right? Because you get a stepped up basis.
Correct. Yes.
However, if your parents this Easter are sitting at the table and they say, "Son, I'm going to give you the house," not such a good idea, right?
No.
Because
then it goes back to the original basis plus improvements. So if they purchased the house in 1969 for $25,000 and they put $50,000 into it, that house is only worth $79,000 for tax purposes. But you sell it for $300,000, you're
going to pay the taxes.
Yeah.
So be very careful. Gifting away a capital asset can cost the person after you are gone a lot of money in taxes. You want to do a life estate or leave it in your will.
Right.
Otherwise, they're going to pay the taxes.
Yes.
Right? And, okay, and not all energy products are going to be qualified for the energy credit as well, right?
Correct.
So if you put in a new furnace and, and it's not up to how much efficient, Chris, 95?
Yeah, right around there.
So it's not going to qualify for the energy credit. You have to make sure that if you're doing these energy conservations, windows, doors, furnace, hot water tanks, insulation, that if you want the credit, which is up to $1,200 per year, make sure it qualifies for Energy Star.
Yes.
And the person selling it to you should be able to back that up.
Hopefully.
Okay, let's deal with this right here.
It says, my mom received a Verify Your Identity IRS letter, and it showed up to me, and it didn't look right. So I took it to her tax preparer, and she verified that it was fraudulent. It was fraudulent, so people need to be careful. Well, first of all, does mom use your address on her return? Why would it come to you? So that would have been the first thing of fraud.
Well, she said, and she showed it to me.
Yeah.
So maybe it didn't go to her house.
Okay.
Yeah, but I
can-
have to tell you, I would really doubt that it's fraudulent.
Yeah, when we first started getting them last year,
We thought they were too.
right, but they're not, and they will. If mom had a refund and that refund doesn't come, then you know it's going to be fraud.
Right, and the
then
other
it's
thing
not
is,
fraud. Sorry.
I think the other thing you might want to do is give us a call because we have the phone numbers that they want you to call, and so if we know if that's the same information as we have on the letters from our clients, we'll let you know because I will tell you I'd really make sure that that letter is not accurate. I would be very suspect because the IRS is doing these very in-depth interviews.
Yes. So-
Okay. All right. We got Mike in West Seneca. Hi, Mike. How can we help you?
How you doing, Esther? Still behind on my taxes, back problems. They got real bad. But anyhow, can you electronically file a back year?
Of course.
How far back you're asking? Well, there was a time if it was too far back, it had to go by mail, and that created a problem too because year after that got electronically filed, and that was done, and the other one wasn't even out of the envelope. Actually, I got to do 2020.
2020's got to go paper.
That's still okay. So I can't do 2021 until that clears.
No, you
No,
can
no,
do,
no. You can do 21, 22, 23 right away.
I tried to push it forward just in case, and 1 year I did have a problem, but they actually let me take it from 17 and push it to 20.
Well, but that was a long time ago, Mike. You know, the IRS has mutated. So I guess that's a good way to put it. And I mean, we can get it done for you. You want to make sure you get it done. I had a guy the other day that contacted me, and he was very sheepish, and he said, now this is about a month ago, and he says, I haven't filed my return for 4 years. And I said, and they haven't been writing you? And he said, I got a couple letters, but then he called me 2 nights ago and said they just garnished my wages. So
well,
you want to get those returns.
gonna-
If they're not doing anything, Mike, it means that you have refunds, and you're going to lose that refund.
Well, it should get in. I've been back and forth with them for waiting.
No, you
Well,
you
have
have
you-
to get it
Never seems
filed.
to-
Did you send in your
understand that,
2020
but
return yet?
If I mail it and then I file the year after that electronically, that'll be done, and the one will still be in the envelope. and I
Don't
won't
worry
be
about
able
it,
to push
Mike.
that
You do
forward.
each year
They
individually.
told me they
You-
can't
you-
push it forward because
Mike,
it was
you can
already
push
done.
it. Mike, get those returns in. You're going to lose your refunds.
Well, I know I got the 3-year thing, but
Well,
wouldn't
Mike,
let me
that
put it
3-year
to the
thing's
following
coming to an
year.
end here pretty soon.
I understand. But all right, but 2020 has to go by mail, right?
Right.
Yep, and you can mail it
Do you have it
certified.
done? Do you have it done?
Well, I'm waiting for one thing from the IRS yet, and I'm going to have to go by what they told me over the phone if I don't get it in the mail. But if I push it to the next year and the next year is electronic, that's going to be done before the other one's even
Well,
out
20
of the envelope, and
Mike-
they won't let me push it. That's what
Yes, they
happened
will, Mike.
before.
Yes, they will.
Mike,
Mike,
2020 dies April 15th.
right.
Okay,
So there you're going to lose all that money.
that.
You're going to lose
2021.
all
All
that
that.
money, Mike.
But anything that gets pushed to 2021, if 2021 is electronic, they say if that's already
Mike,
filed and
You're
closed,
going to
I
lose
can't
that
push it
money if
forward.
it isn't done in 15 days.
They don't push
understand.
anything forward.
They
Mike.
don't push things
Every
forward.
year stands on its own.
Well, if it's got to be mailed, I'll mail it. Return receipt. Okay,
And
thank you, Esther.
right. and You got 15 days.
I understand.
Okay, Mike.
If, I don't
If you
get
need
that
help,
letter
call
from
us.
them- okay, thank you.
All right. Thank you. Bye-bye.
Bye-bye.
I just feel so bad because that's what happens. After 3 years, people go, oh, well, they're not bothering me. No, they're just going to take your refund because after 3 years, you lose the refund.
Right.
So,
right.
I mean, remember that lady that had all those earned income credits that you did and she hadn't filed all those years? How much did she lose?
Oh, 20, 25, 30,000,
Yep,
something like that.
It's terrible. I'm Esther Gullius, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. And we're going to take a short break, and we'll be back with your questions and comments and text after the break.
We are family. I got all my sisters with me.
Hey, happy Easter to all you Western New Yorkers. God bless all of you. Thanks for listening. By the way, that last what was the text that came in about she went to her preparer and her preparer said it was fraudulent. We were so concerned because they will not process a return until you answer this. What did we find out, Chris?
Right. The IRS is sending out 3 different types of letters, and there's codes on the letters on the upper right-hand side. It's a 5071C, so a 5071C, a 4883C, or a 5747C. So again, 5071 or a 4883 or a 5747.
And they all look different.
So
if the preparer that your mom is using is maybe a smaller preparer and they've only seen one type of letter, they might have given your mom unknowingly bad advice. I will tell you, these letters you got to take seriously, or they won't process your return.
Right.
Okay.
I mean, I have somebody who didn't do it from last year. They thought it was fraud.
Yep.
And they still haven't got their 22 refund. I said, guess what? You're not going to get your 23 refund until you get this done.
Absolutely.
Oh, we're doing that tonight when we get home.
Yeah. Anyway, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. All of our offices are open 9 to 9, Monday through Friday. We will get it done. And by the way, my assistant, Lisa, is here telling me a really great tool is our website, because there's a packet that you can download on things to get ready so that, if you're in Florida lying on the beach this spring break and you got time, look at that packet. It'll keep you organized.
Yeah, while you're on the beach getting a tan.
Right. I mean, I think everybody left Western New York to go to Florida this week. Anyway, okay, other things you should pay attention to. By the way, 8030930, 8030930, star 930 on a cell phone. And somebody alluded to it before, a caller, that at 17, your child drops from being eligible for the child tax credit, which is $2,000. They drop down to a eligible individual.
And other dependent
Right,
credit.
and that's $500. So that doesn't mean that they aren't. I know a lot of people say that's when they're really expensive when they're 17. Well, I know. What can I tell you? But so you want to put that into your thinking cap as you're planning for next year. If you have a 16-year-old, your tax bill next year goes up $1,500.
Right.
Right?
Yep.
Okay. The other thing that I wanted to bring up, let's see what else we got here. I know. If you're medical personnel that got paid the $1,500, $3,000 bonus for working during COVID, that's found in box 14 of your W-2. It's a subtraction on the New York State return.
Right.
Under 225. So you've got to make sure that you do that, or else you're going to overpay your taxes, right?
Yes.
And then the other thing that I love is when people say, I got capital gains and I hate it. Let's talk about that. Capital gains are a good thing.
Especially with, interest this year, how many people interest has gone from $500 to $10,000.
That's true.
Right? And they're complaining they owe money. Well, that's because you made money.
Right. If you didn't take it out of the bank, the IRS doesn't care because it's available to you.
Right. But you made the money, so you gotta.
It's interesting because I had somebody yesterday kind of complaining about paying their taxes on all this extra interest they got, and I said, "I'll tell you what, give me the money, and I'll pay your taxes. And they said, well, that doesn't seem right. Obviously, I was kidding, but it's the truth. If you got $10,000 in interest and it's going to cost you $3,000 in taxes, you still made $7,000.
Right.
You have to look at it that way.
Yep. Yep.
Okay, let's go back to the phones. We're going to go to Ray. Hi, Ray. How can we help you?
Esther, good to talk to you again. This is Ray. I'm calling from Depew. I'm a good friend of your very good friend, Kathy Anderson.
Oh, she's a wonderful lady.
Oh, she is. I always want to put a plug in her. She's one of the best real estate agents around with Hunt Real Estate.
She sure is.
Anyhow, I did not do a required minimum distribution. Is that what they call it when you get to be 72?
73.
Okay.
73, Ray.
Well, I was talking to the manager of our bank branch, and she gave me the ending amounts in this little itty-bitty piddly IRA thing, okay? I mean, it's $2,600, $2,800, you know, it's not a lot. But at the end of 2022, she was trying to read this thing on her computer screen. Did I have to? I'm only 73 now, by the way, and I wasn't 73 last year until September. Okay, so she said at the end of 2022, I had 2673 in this thing, and she was reading the thing, and she thought that at 72 I had to take something out of that, but did she read that wrong? Maybe
22. It was 72.
Right. This is now. We're now talking about 23. And 23, it's 73.
Well, I am 73. Okay.
Do you, Ray? Do you have any other IRAs?
No.
So when your required minimum distribution is like $100, so your penalty is not going to be much. Did you take it out?
I did not I did not on my 2022 taxes.
Okay, so you want to make sure that you get it straightened out, and then apply for the exception to penalty. But again, it's like $100 you got to take out. So the penalty, worst case, is $50. But this year they made it $25. So you got to put it. You got to straighten it out as soon as possible.
Yeah, because if I only turn in the amount ending 2023, which is just over 2,800. And don't go back and correct that at the end of 2022.
Right, you got to do everything. You got to make sure you got to do the one and then the other.
What's your other income, Ray?
Oh, well, I'm lucky because I don't pay any tax on my retirement pension because I'm a clergy.
Okay.
So because of that, all we have is Social Security and some interest and stuff. So I haven't done my adjusted gross income, but we have not been paying any federal or state tax for the last 2 or 3 years.
Ray, I have an idea for you.
Okay.
If there's only $2,800 in this account, take it out, close it, and then you never have to worry about your
exactly
RMD
right.
because you'll probably still pay no taxes, and it's one less headache in your life.
Yeah. I know it's on an adjustable rate, and it's paying like 5.36 now. So I hate to close it out, but it's not like it's going to make me wealthy on 2,800.
No, that's true. But anyway, you know, what does the Bible say? Render unto Caesar, right?
Yeah, right.
So you want to make sure that Caesar gets his due, Ray.
I'll try to mail this to Caesar and see if it comes back. Okay, thank you so much, Esther.
All right,
we
Happy
love you,
Easter.
and we think you do great. Take care.
Thank you, Ray.
Thanks, Ray.
That was a very wise thing, and I'll tell you why Chris said that, because his standard deduction's like almost $31,000. So Ray could have cashed out a $15,000 IRA and put that money in the bank at 5% and still not paid taxes. That's what it sounded like. So that there are people that are unaware that they have such a large standard deduction that they could take all kinds of taxable income out and move it into other vehicles and still not pay taxes. And that's part of what we want to help you with. Anyway, let's go back to the phones when we got time. Mr. Bill. Hi, Bill.
Hey, Esther. I just wanted to wish you and Chris and Tiffany a very happy Easter.
Oh,
and I just
thank
wanted
you.
to mention I had put together a list of links for the upcoming eclipse, and I can email them to you, and I could mention where people could look at that if they want, if you'd like. So it's just b.link/ONCE. It's like the words blink once, but it has the slash between the words, which is regular forward slash, and one
Because
dot
it's
after
winking
the
at
E.
you.
Okay. Well, thank you, Bill.
And your email is what, egtax@hotmail, did you say?
egtax@hotmail.com.
I'll send that right to you so you can see it.
All right. Thank you, Bill.
Happy
All right. I'm Esther Gulius, the tax lady from EG Tax. Speaking of ministers, I was just yesterday doing a minister who said, I can't find anybody that knows how to do ministers' tax returns. Well, we do at EG Tax.
Yes.
And so if you are a minister, you have to understand that you don't pay taxes on housing allowance. You own FICA. You only pay income taxes on your wages and FICA on your wages and FICA on your housing allowance. And if you're getting a housing allowance, you have to make sure that you spend all that money on maintaining your home, or else it becomes taxable as well. So those are things. It's a very interesting thing, ministers. They're dual status. They're paid on a W-2, but taxed like they're self-employed.
Right, right. And then they get to deduct their expenses, out-of-pocket expenses, from the self-employment tax, not the income tax.
Right. And the other thing is, not everybody, and this goes back to what Chris was just talking to about this minister, not everybody should do a Roth.
Right, right.
Roths, I know everybody's enamored, but it's tax-free forever. But you have to understand, you get no benefit now. And it's interesting. I just said to somebody the other day, when you do a Roth, you may never ever. You might not be here because you passed away. That might not be the tax law later. You really don't know. So not everybody should do a Roth. Anyway, I'm Esther Gulius, the tax lady. You can go to our website at egtax.com. Until next week, I'm Esther Gulius, the tax lady, with Christopher Fabian. God bless you. Have a wonderful Easter. Thanks for listening.